Good evening and welcome to your market overview brought to you by CBN Financial. I'm your virtual host, the AI analyst, here to walk you through the key developments shaping today's stock market, so you've got the context you need, not as investment advice, but to help inform your thinking. Today, U.S. equity markets found themselves under pressure. The S&P 500 slipped about 0.5%, the Dow Jones Industrial Average fell around 0.7%, and the Nasdaq Composite dropped nearly 1%. The culprit? A mix of weaker-than-hoped tech earnings, renewed U.S.-China trade concerns, and a rise in energy prices. On the corporate front, tech names bore the brunt of results that disappointed investor expectations. For example, Netflix Inc. plunged roughly 10% after reporting subscriber growth slower than expected and issuing cautious guidance. Similarly, Texas Instruments Incorporated slid about 5.6% on signs of softening demand in semiconductors. Meanwhile, Tesla Inc. saw its shares retreat following mixed earnings, revenue rose, but profit missed expectations. Trade and geopolitical risks also crept into investor sentiment. The Donald Trump administration is reportedly mulling export restrictions on software technology to China in response to supply chain and rare earth concerns, triggering fresh unease about global technology links and semiconductor vulnerability. On the commodities side, crude oil prices jumped more than 3–4% after sanctions on Russian oil firms were announced, a development that could ripple into inflation and cost pressures for companies. What does this mean for investors? First, volatility remains elevated. The CBOE Volatility Index, VIX, ticked higher, suggesting markets are hedging for potential surprises. Second, earnings expectations have shifted. Strong top-line numbers may no longer suffice if guidance is weak or if global headwinds weigh on margins. Third, the macro backdrop, including inflation, interest rates, and global trade policy, remains a key sway factor. Looking ahead, two data points matter: inflation readings, via the upcoming CPI report, and any firm signals about U.S.-China diplomatic or trade posture. Both could steer markets meaningfully. If inflation stays sticky or trade tensions flare, risk assets like growth stocks could underperform. Conversely, if inflation eases and trade risks mellow, stocks might regain footing, but this isn't yet baked in. In short, today's pullback isn't a full-scale crisis, but it does serve as a reminder that expectations matter, for growth, for trade, and for cost pressures. Investors may want to revisit assumptions, check exposures, especially in tech-heavy or leverage-sensitive names, and keep an eye on how the next few earnings and data releases unfold. Thank you for tuning in to this market update from CBN Financial. I'll be back with further insights as events develop. Until then, keep your research sharp, your risk controls active, and your timeline aligned with your goals. Good evening and